Hey traders, Cory Mitchell here with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of August 11th. We're going to look at Bitcoin, gold, and stocks. Each week I go through the same process, just helping myself decide how aggressively I want to be trading, where I want to be trading. I do have a couple lists, the current stock watch list, swing trading watch list, the best swing trading stocks list. That's just high momentum names. And yeah, so let's get to it. The indices, we got the NASDAQ up here near highs, the S&P 500 up near highs. We had a little pullback, no lower swing lows or anything. You know, we came back, kind of tested that little area. Same with on the NASDAQ. NYSE, a little bit different story. We undercut it a little bit, so it's not a huge deal at the moment, but basically these are in uptrends. It's like that's, you know, a little bit questionable. And same with the Russell. It's, you know, we undercut that level. You know, it's pretty, not a huge pullback. So is it one of those things? It's like, is this kind of just a tiny little drop? It's not really changing the overall trend. You know, we're still moving up overall, but it's a little bit of a hiccup technically. Canadian index still doing really well. So I'd say overall the indices are looking pretty good, but we do have a little bit of you know, technical hiccup here with these little bit deeper pullbacks, and you can see we have not recovered as much as the NASDAQ or S&P 500. So what that tells us is large caps have bounced back, whereas the Russell 2000, a little bit smaller companies, the NYSE composite, very broad measure of stocks, different industries, different sizes, and it fell and it hasn't bounced back as much. So you have some really big stocks which are doing okay, but we're starting to see a lot of other stocks not doing quite so well, and we see that in our market health indicators, which we'll get to in a little bit. Had been talking about a potential retest to this old range. This was, yeah, pretty beautiful here. Came back, tested the old range, started moving up. And so, yeah, this was kind of the entry point right around this area. Once you start to get the bounce up and you get a little bit of confirmation that it's holding that area, and had a nice, probably up about 5-6% since then. The next hurdle will be, so we have the all-time high here. And so it's either, if we're long, we're hoping it just breaks through, or if it stalls out here and starts turning over, then there's the possibility of another range, you know, kind of like this, at which point maybe 112,000 comes back into play as a possible or to get back in, or if you're not in, to maybe get in. But right now it's kind of, hope it breaks through, but if it doesn't and starts rolling over, then maybe this becomes a more ranging environment. If it ranges, great, then you're kind of looking at entry points near this old range. If it drops back up, so just like before, this was allowed to come back here, but if it starts really cutting back into this old range, that's not a great sign. So if it starts dipping back, you know, down into this area, not good. If we range and we hold here, this is then a buy point, but ultimately we're looking for that move up and out above that all-time high. Last Friday we had talked about this rounded bottom, or last weekend. So this was Friday, and I kind of said like this is a deeper pullback, and it's like pretty much gotta go if this rounded bottoms, because you can't pull back too much more because then you take out that low. So it was kind of a, you know, we go high or this pattern's no longer there, and it took off. Gold also moving up. You can see gold's more rangy. The miner's really strong, moving well up above the prior highs, whereas gold's still stuck below its highs. But this is generally pretty good sign when the miners are leading. That's generally good for the industry as a whole. I don't trade gold really directly very much. I prefer being in the stocks because they move much more. And so yeah, that's doing good. Market health indicators. This is basically looking at what's going on underneath the hood. We have the S&P 500 chart up here. Volume not important to me at the moment. This is percentage daily movement. If it's hanging above this, basically 2% down days, I don't like. That's a major sign to be cautious, and we haven't had any. We got, kind of close, but 2% is the cutoff, and we didn't get there, so it's still an overall low volatility environment. If you look, uptrends are typically characterized by, you don't have the big sell-off days. Through this entire stretch, you don't have sell-off days. Once you start getting them, it gets a little dicier. So this is still uptrending behavior in terms of movement volatility. Advanced decline line moved up to new highs, while the S&P 500 is just below its high. So that is a positive. This is neutral. This is up volume divided by total volume. Basically, this is just looking for extremes in volume. We haven't had any in a long time. Skewed to really one side or the other based on which way stocks are moving, the amount of volume going into them. And this is percentage of stocks above their 50-day moving average. It's a very crude measure of how many stocks are in short-term uptrends. Generally much easier to make money when most stocks are above their 50-day moving average, moving up. And so basically since here, that's been the case, and fairly easy money. This is the first time we are right around that 50 mark. Not ideal. Even if, hovering around that line, sometimes it's okay, other times it's not, so I'm definitely more cautious. And, like flat periods like this, just not a lot moving up. We talked about that with the indices, maybe some smaller caps, quite a few stocks, maybe not moving up quite as much as the large caps, which are more representative of the S&P 500 and the NASDAQ 100. So overall, it's okay, but I would say, I kind of summarize it down here, conservative long exposure on stocks. Like, it's not horrible, but there's a couple little yellow flags popping up. So what does conservative long exposure means? Well, there's a few ways I like to do that. Is it's either less capital deployment or less capital deployment. So, you got your portfolio of cash, and, usually you might deploy all of it in really good conditions. And as conditions gets worse, I'm putting less into long positions. And then also could be a little more risk adverse. It's like I'm aware that maybe stocks aren't quite as explosive as they were, so might have a little bit tighter stop loss. I might have a less leeway in terms of how much I'm going to give back if something moves nicely but then starts, not moving so well. Then I might just take my profit and get out because I already know conditions aren't as good. Bitcoin has taken off, major opportunity, that's passed. We may get another one if it starts ranging, but right now it's wait and see if the strength continues. Gold is lagging the miners a bit. That isn't a bad thing. It remains a decent area. Day trading, always providing opportunities every day, whereas swing trading is more sporadic. I don't know if we're going to, this is not prediction. I don't really predict where the market's going to go. I just trade basically what's happening. And so I don't know if we're heading into a period of more inaction. As I said, I'm already, less exposure to stocks at the moment. If conditions were to weaken, then I'd be out, and I'm mostly just waiting for either things to get really bad and look at some shorts, or for things to get better again. But either way, there might be a period where there's not a whole lot of action. So just to be aware of that, periods of inaction and inaction with swing trading, and want to be aggressive when times are good and back off or be out when the red flags and the yellow flags start popping up. Yeah, that's your outlook for this week. Have a great trading week out there.